Welcome to Insights. I'm Eric. I'd like to do another grain review here, open content, in order to discuss the evolution of the trade, how it's used to filter out noise essentially within the day-to-day trading action, to filter out tidbits of information you find on social media. While those are useful and a source of entertainment many times, unfortunately, I think they come in and corrupt decision making shorter term. So let's open up the matrix here, and this is the grain complex. The evolution of the trade focuses largely on the primary trend here, and the primary trend, even with yesterday's sharp decline, didn't change at all. We can see that even with this is the daily trend, the weekly trend, and monthly. And yesterday's decline only influenced wheat, which was already one of the weaker ones. The daily trends for corn and soybeans remains up. I know there's discussions about whether or not you should sell the rallies, but honestly, selling the rallies against the primary trend, which is up, is a dangerous practice, and we're going to show that in a moment within the charts themselves and see what it looks like visually. But swimming against the current is never a really good idea, and I know a lot of people are doing that. The primary trends for corn and beans and wheat are all up. That's why they're in this BU column. They'll move over here if they ever flip down, and if they flip down, you close out your long positions. The cycles are just like yesterday. The cycles haven't changed much. They're not extended, and everything else is relatively similar. What we're going to talk about is the tidbits of information we see on the internet. And I'm not trying to single out anyone, but in this case, this individual was talking about poor conditions on February 8th, and the corn market was rallying, and then a few days later, the tweet comes out there's a short-term top. And this could be coordinated within a longer-term strategy, and I don't know that because I don't even follow really anyone. I just see some of this stuff sent to me, and I stumble across it on the internet as well. I don't think this is trying to be disinformation, but if you take pieces of information like this, in one moment you might chase it and buy it, and the next moment you might thinking, well, I just bought it, now do I have to sell it? The fact is if you're doing stuff like that, you're not following a broader investment strategy or a trading discipline, and then that's where the evolution of the trade comes in to help gives you a map to follow, a course to fall back onto when a lot of short-term information tidbits hit you. Here's another one, and it's unrelated to the grains. This is where an individual was talking about the stock market, quoting someone I know a few days ago. They were talking about as little as last week where the correction was coming, and now a couple of hours ago they just came out and said, well, that was not really going to happen. They pulled back on that, and that's the point of this stuff. There's no investment discipline to the internet in general, to these tidbits. They are designed to entertain you, designed to get follows and clicks, but that's about it. So the daily trend itself has only come down in wheat, and corn and soybeans has yet to curl over. They are likely to come and curl over quite soon, and we're going to discuss that. And a sharper correction is going to pull us into the weekly trend, but we don't know if it's going to do that yet. Again, pulling from yesterday's open content discussion, this all has to do with what energy does while price reacts. If energy starts coming off the mat, and we're going to look at that quick before I look at the visualization of the 3 time frames, the energy of the grain market, and we're going to follow the grain or the composite grain DI. Let me pull that one up, and it comes up. The composite grain DI focuses on all 3 grain markets, the major ones. And we're going to, just like yesterday, we're flat on the mat here, down by the lower thresholds. If you want, if the price of all the commodities is going to curl over here, the energy build has to pull off this lower line, close above zero, and reach towards the upper bound in order for it to create what is considered a bullish setup, a setup which then the invisible hand is accumulating, while the public in itself is losing confidence in the uptrend and becoming disillusioned. That's a setup we're waiting for, but it takes weeks for that to develop. That doesn't develop overnight. It won't develop on Friday's update of energy either. It's going to probably take weeks and weeks, several months. These are slow transitions. If the invisible hand wants in, it's going to do so quickly, and it'll happen much faster, but it'll still take at least a month for it to happen, maybe even 2 months. Well, I want to look at the soybeans here and have a visualization of how the evolution of the trade works, and then we're going to close out this review. In terms of soybeans, which is the leader, we've had an uptrend here in the daily, and you can see it by the green box. The green box has been up, and this represents the daily. But what you can also see is that the daily in itself, once these lines, and it's the LTC, falls below zero, it's going to create an unshaded region, which you're going to have a down impulse. So there's a lot of more damage that needs to be done on soybeans on a daily basis to even flip the trend down. So anyone who's saying I need to sell soybeans because soybeans is in trouble, soybeans is not in trouble price-wise. Soybeans is in trouble time-wise. Time, this box is one of the largest that the computer has seen on record, and that's why you have such a large standard deviation for the price cycle. It's paring that down, and time has been up a long time, and it needs to go into a correction. But ultimately, it won't hit correction until this box is no longer shading price. The weekly is another example, and the computer studies all three time frames simultaneously. The weekly is also up, and if the weekly is going to come back down, it's going to have to fall below this zero line here, which is going to take quite some time or a powerful drop in order to do that. Now the weekly time cycle is not extended as the daily in soybeans. Here it's almost 6. This one it's not quite 1. It's extended, but not really extended to the point where it's troublesome. So perhaps the correction is going to be limited to only the daily time frame. It could fall into the weekly, but I wouldn't make any assumptions because the weekly is not extremely extended in terms of price or time. So that's the computer is looking at both of them simultaneously, and that's how you have to teach yourself how to look at it as well. The monthly is what we follow, or the evolution the trade bases its core position on. And this up box has been in place for, well, you can see it's 6 months, but this is what it looks like. This is what 6 months looks like on a very long-term chart. In order for the primary trend to flip, we have to get below the hash line down here. So that it's going to take some time, and the soybeans primary trend is nowhere near extended. It's still well below it. 6 months, its standard time cycle. So this is how we visualize the trends. I know people are like looking to sell, but if you're looking to sell short term, you're selling against a primary or a daily trend that hasn't even flipped down yet, which is bad discipline. The weekly hasn't flipped down yet, and the primary is still relatively young. So the only thing you would really want to be doing here is taking profits, and we talked about that yesterday. That's if you want to take some profits, it should have been done a few days ago, maybe even a week ago. It's a little late to probably be chasing into the decline to take profits, but you have to understand if you're starting to sell and building a position of short in soybeans against the primary trend, you're not following the evolution of the trade, you're following someone else's gut feels, and probably is going to lead to mistakes. So that's the extent of the grain market. Just wanted to update and visualize, work over how we filter out the noise of daily information, these free tidbits, and then establish a visualization of the daily, weekly, and monthly trends without really, and even though you can't see them simultaneously, the matrix allows us to do that, and then we follow the evolution of the trade to understand how deep this correction is going to go, if it even comes. And I'm sure because of these time cycles, the correction's coming. But it may be restricted only to the daily because the weekly is not super extended, even though these numbers on a price are. You have to judge these two relationships here in order to think, well, how far can this correction go? And even if you think the correction is going to go, the correction can be a time correction. It can be shallow enough just to flip these things, but it really doesn't do much in terms of like the price, and it's always dangerous to short a primary trend that's up. If you have any questions about the evolution of the trade or anything you've seen in the grain complex here in terms of the matrix, or if you're considering subscribing and want to understand more about it, contact me directly through the blog, or you can write some comments below the video. Definitely subscribe to the channel if you're looking for more good information on all sorts of markets. There's a lot of information that gets posted here. And other than that, I want you to ignore all the daily noise, ignore all the free tidbits, and enjoy the entertainment side of social media, but don't get focused too much on it. So thanks for watching and enjoy your day.